Money Talks, I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Philippine peso weakens to a fresh low, hitting 59.355 to the dollar. The country's total outstanding debt scales a fresh high of 17.65 trillion pesos. And in our continuing deep dive into the economy, can the Philippines manage to keep GDP afloat at 5% or more this year? We speak with Undersecretary Rosemary Edillon of the Department of Economy, Planning and Development and get the view from the outside looking in with Ruben Paracuellos, the world's chief ASEAN economist. The Philippine peso sank to a new record low Wednesday under pressure from a strong dollar and the prospects of another domestic rate cut. The peso closed at 59.355 to the dollar, weaker by 14.5 centavos from the previous session. It beat the previous record set on December 9, 2025 at 59.22 against the greenback. The peso's been on a slump since the U.S. attacked Venezuela and captured its president on January 3. Mike Ricafort of RCBC says the peso is in defensive mode amid geopolitical tensions, triggering investors to lean on the dollar as a safe haven until the situation improves. The peso's slide also comes as the BSP signals another rate cut on the horizon. BSP Governor Eli Remolona Jr. did not respond yesterday to questions from Bloomberg on whether the central bank is intervening in the currency market to support the peso. In a statement regarding inflation on Tuesday, the BSP said the Monetary Board is anticipating an end to its easing cycle. Any further cuts will depend on incoming data. In separate comments, Remolona said that a cut remains on the table due to reasonably low December inflation and subpar economic growth. He added that the central bank would only intervene in the foreign exchange market if the sharp depreciation triggered an impact on inflation. The Philippine peso this Thursday opens a tad stronger, 59.30 to the dollar. Another fresh record, this time on government debt. The country's total outstanding debt climbed to a new high of 17.65 trillion pesos by the end of November. Data from Treasury show the debt rose by about 0.5% from October's 17.56 trillion pesos. It is now nearly 2% above the government's programmed year-end level of 17.36 trillion. Year-on-year, debt also rose by about 10% from the 16 trillion pesos posted in November 2024. The Treasury said the month-on-month increase came from new domestic and foreign borrowings, partly tempered by lower valuations of dollar-denominated debt as the peso strengthened during the month. Nearly 69% of the debt stock came from domestic sources. Jonathan Travelas of Reyes Tacandong and Company called the record-high debt a wake-up call, warning the challenge is balancing fiscal discipline with growth and keeping borrowing focused on productive spending. Meanwhile, RCBC's chief economist Mike Ricafort said the higher debt reflected new securities issued to cover wider budget gaps. The Bureau of Customs misses its revenue target for 2025 despite posting its highest collections on record. The agency collected over 934 billion pesos last year, falling short of its 958 billion peso goal. This marks the second straight year Customs failed to hit its annual target, though collections still exceeded 2024 levels. The Bureau cited lower import volumes, the temporary suspension of rice imports, and volatile global commodity prices as key challenges. Rice imports were banned from September to December to protect local farmers during the harvest season. The agency also said it prioritized border protection, cracking down on prohibited, misdeclared, and undervalued goods. Looking ahead, the Development Budget Coordination Committee is targeting over 1 trillion pesos in annual customs revenues from this year through 2028. 2026 Global Outlook casts the Philippines as a disappointing growth story, weighed by what it calls a costly corruption crackdown. But it also says the Philippines is one of the few emerging markets with room for more rate cuts. With us now for more, visiting Manila this week, Singapore-based Yuben Paracuellas, the chief ASEAN economist at Nomura. It's good to see you in person again, Yuben. Welcome back to the program.
Thanks for having me.
All right,
Happy to be here.
Happy New Year. What do you
Happy
make
New Year.
of the peso's recovery there?
Yeah, I think it's spotting on expectations that the BSP will come in and try and smooth things over. They've got the reserves to be able to do that. And yeah, we know they've already said that they're not targeting certain levels, but when the moves are too exaggerated, that's a chance for them to come in and reduce the volatility a little bit. So not surprising in that respect.
Laissez-faire, as you mentioned, in the way that the governor had phrased it, not really putting a target to the peso, but if indeed there hadn't been any sort of smoothening operations, do you think the peso could have fallen a lot more?
I think there could be a lot more pressure. Again, we haven't seen, after the remittances inflows in the seasonal period of December, the source of dollars are probably easing a little bit now, and we don't see much inflows because I think, based on my conversation with foreign investors, inflows are also lacking because of a negative sentiment on the back of the corruption scandal. So I think there's some reason to believe that there could be more pressures, and this is why I think BSP is on guard.
So do you think the peso's weakness could help or hinder the catch-up strategy of the government this year?
Yeah, I'm not sure if that's really the main consideration for them. I think the main thing is really the growth outlook in the near term, because I think it's really struggling. If you look at government spending, latest data is of November, it's really contracted by even more compared to the previous quarter. So growth is going to be moderating by quite a bit, and so I think they need to try and figure out how to reverse that by bringing back spending.
Well, let's put that into context, because Nomura's Global Macro Outlook for 2026, published December 11th, really has a bullish global story, except for two in the ASEAN, and in particular, disappointing growth in Thailand and the Philippines, both hobbled by domestic challenges. If you were to choose between the two, which possibly could disappoint a lot more because of domestic challenges?
Yeah, so I think the country that faces more downside risk is actually Thailand, because they have both structural and cyclical factors that's affecting economic performance. So aging and the lack of competitiveness and pressures from China. And then you've got the political uncertainty. There will be elections again. We don't know if this is going to resolve the problems that they've had in the last decade or so. In the Philippines, I think it's a little bit more temporary in that sense, because fiscal spending is down, but we know in previous episodes of a similar type of corruption controversy, the government tends to find ways to implement catch-up spending plans, which I expect to happen maybe in the second half of the year. So that should turn things around. And I think also this is an opportunity to really implement reforms for budget transparency and improving governance to try and prevent this from happening again in the future.
Well, I'm happy to learn that it's Thailand, not the Philippines. But then when I read your report, the way that you phrase it is quite concerning, because you labeled the Philippine chapter as the costly corruption crackdown. And the inadvertent fiscal tightening is substantial, hurting growth materially through the first half this year. Could you walk us through the reason why you phrased it this way? And the language that came with it seemed a lot more depressing.
Yeah, so I guess you can think of it from the near-term perspective. So I'm just looking at maybe in the next couple of quarters that growth will be really subpar.
Would that be two? At least two?
At least 2 quarters from
here. So there
here.
could be more.
Yeah, and beyond that, we'll have to see, because it's still quite uncertain. It really depends on how much they can implement on the catch-up spending plans. Again, the starting point for last year was actually pretty optimistic. We had growth relatively okay. And then when this controversy hit, growth was really affected very significantly over a very short period of time. And we know this could persist for a while, just again, based on past episodes. So yeah, in that sense, yeah, it is negative because, you know, one of the key bright spots in the Philippines was the economy being able to grow 6%. And faster than ASEAN peers, maybe except Vietnam. That was a post-COVID recovery. But then now, just from this controversy, growth is now potentially below 4% in the second half of last year.
And it's quite concerning when you take a look at the output gap because that has widened.
Yeah.
And when you compare that with the pre-scandal,
Yeah.
it's a sort of a concern when you look at jobs
Yeah.
and capacity.
Yeah.
So how much of a risk is that then?
Yeah, it is a major risk, and I think there's still quite a bit of uncertainty. So for me, the balance of risk could still be tilted to the downside. And as you say, the output gap was already quite negative, or a small negative before the scandal, and because of the drop in government spending, the gap has widened a lot. So yeah, there is subpar growth, I think, at least for the next couple of quarters.
You made a mention of previous fiscal underspends because of similar scandals in 2011. You've studied that. You've also studied the one in 2023. What makes you say that this is just going to last a couple of quarters, that it couldn't be a lot worse than what you've already seen?
I'm not sure if this is actually going to last just for 2 quarters. I'm saying just based on those episodes, there will be at least a couple of quarters where underspending will be persistent. But beyond that, again, it will depend on a lot of these factors. That's why there's still a little bit of uncertainty. But again, I think it's reasonable to expect that the government is clear in its agenda to try and provide catch-up and prevent growth from weakening further. So I think that's potentially happening in the second half of 2026.
Well, let's put some numbers to your narrative because we've tracked how you've seen the economy just slow from last year. If we can just pull up the graph. You're tipping for 4.7% GDP for all of 2025, even with a low base. So that pretty much turns out fourth quarter coming in at 3.9%. So that's sub 4% growth. And you've also cut 2026 GDP forecasts from 5.6 to 5.3 in such short span. I mean, why this decision to choose the lower path? What is really concerning you?
Yeah. So again, it's the direct impact from the fiscal contraction, the drop in spending. That's the direct part. But the indirect component is what we call the spillover effects. So we've seen that earlier in the Q3 number when the scandal broke and consumption actually slowed a lot more. So I think that's something that you'd expect in this kind of anti-corruption drive. So we've seen that in the past, not just in the Philippines, but across other countries as well. And I think going forward, these spillover effects will also expand. So from household spending, it could affect business investments as well, because obviously there's quite a bit of uncertainty, there's negative sentiment, the central bank keeps talking about it. So if the drag is now sort of becoming more broad-based, not just the drop in government spending, so you'll see growth coming potentially below 4%, at least in the near term.
So what's it like for maybe a typical household? What's the feeling going to be like? The fear of waking up without a job or unable to pay rent or maybe even pay the next grocery? If household spend isn't, working out and businesses aren't investing.
Yeah, exactly. It's just the uncertainty, the economy is slowing down, and typically when inflation is actually quite low and it's been very benign, that tends to support household spending. But it's not the case this time because of all these negative headlines that you're seeing. That tends to depress household sentiment as well. And in addition to that, we have a global backdrop, which is very, very uncertain, and headlines nowadays are kind of easy to see from social media and propagate in those other channels. So I think sentiment-wise, it's becoming more and more negative.
And not to forget the large twin deficits that you've also cited in your report, the fiscal deficit narrowing only slightly, 5.1% of GDP, and also the large current account deficit staying near 3.7. I mean, that's still huge pre-COVID standards. So how close is that going to become a problem then? Is it going to be a funding problem
Yeah.
or a ratings issue?
Yeah. So on the twin deficits, it's actually, I would have thought it was becoming a bit more of an issue before the scandal, because we know there's quite a bit of importation that's happening on the back of the infrastructure spending. Capital goods imports were rising, et cetera. So, but then now that factor is less of an issue because there's less government spending. So I think the narrowing of the twin deficits will come in the near term. But whether the improvement is enough for ratings agencies, for example, to provide an upgrade or think about an upgrade, I think it's not really the case yet. So S&P is a good example. They had the rating outlook on positive. But then in November, 12 months down the road, they said, we'll keep it positive, but they did not upgrade. So I think that's partly because of them being held back by the uncertainty of the corruption scandal and the growth outlook being negatively affected. So the key for me is 12 months from here, when they need to decide on whether they need to upgrade the Philippines. I think it's still quite uncertain. If at that point there will be some resolution to the corruption scandal, they could potentially upgrade the Philippines to A-, right? But on the other hand, if there's still no clarity, they could potentially, the risk I see is from positive, we go back to stable.
All right, well, so many ifs still, but thank you so much for the
Yeah,
context.
thanks,
Really
Cathy.
appreciate it,
Yeah,
and safe travels back to Singapore,
yeah.
Ruben. Paracuelias of Nomura joining us here. Well, you're watching Money Talks. Coming up, we'll speak now with the Undersecretary of DepDev, Rosemary Edilion. Keep it here on One News. Same position, direct. All right, I'd like to speak with Rose.
Yes, hi Kathy.
All
Happy New
right,
Year.
welcome back. Happy New Year. Good to see you again.
Yeah, nice
All
to see
right, I
you too.
just had
Yeah.
Ruben Paracuelias of Nomura, and he gave some context to the disappointing growth story that he sees of the economy. We'll pick up from there, but then also pick up from the peso kasi lumakas naman at the start. Welcome back to Money Talks. I'm Cathy Yang. The government is confident the signed 2026 national budget will help the economy regain the momentum it lost in the past year due to the corruption scandal. The government on Monday revised its growth target for this year to 5 to 6% from the 6 to 7% goal previously. It now expects full-year growth for 2025 at 4.8 to 5%. Well, with us now for more is Undersecretary for Planning and Policy at the Department of Economy, Planning and Development, Rosemary Edilion. Happy New Year, USEC Rose. Welcome back to the program.
Yes, thank you very much for having me, Kathy, and Happy New Year to you too.
All right, so first off, how is DepDev weighing in on the peso's recent record drop? I mean, we've seen the peso recover a tad at the open, but how does a weakening peso shift or even influence or anchor the government's recalibration and recovery strategy?
Yeah, actually, for the whole year, we do expect some, some sideway movement of the peso. So as you know, it really depends on what's happening in the U.S. as well, and versus what's happening with our country. I think right now, with the recent move of the U.S., everybody's still, weighing in, is this a good or a bad thing? And that is why we're seeing some sideways movement. And I think we'll have to, others will still adopt a wait and see attitude over the next few days.
Well, it's certainly going to need a lot of close coordination amongst agencies. How closely is DepDev coordinating monetary and fiscal policy with finance, budget, the Banco Central, so that the easier rates plus that big budget push don't reignite inflation or destabilize the peso?
Yes, as you know, we have the Development Budget Coordination Committee. So that's a committee of the Economy and Development Council, and uh, the Banco Central actually sits as a resource person. So every time we meet, we have a Banco Central official with us, either the governor or the deputy governor, so we can have this, as you would say, a close coordination. So at the very least, the monetary board is aware of what the executive is doing, that what government is doing, and so. Although we have an independent monetary policy, but at least they are aware of what we're doing, and this is the path that we're going to we're proceeding. And as well, both of us, in the case of the Banco Central, of course, their main goal is really financial stability. But in the case of us at the executive, we also want this financial and price stability because we want to be able to sustain growth, and we also want inclusive growth.
Yes, in fact, SEC RC made a mention of supply side interventions that you're intending to pursue to ensure low inflation continues to support real incomes as well as domestic demand this year. So, exactly what sort of interventions might those be?
Yes, we will continue our strategy of adopting this very anticipatory forecasting. So as you know, we faced this problem of high inflation, in particular the food inflation back in 2023, and so the what we call the IAC-IMO, the Interagency Committee on Inflation and Market Outlook, was created in late 2023, and then it's a very technical working group, and the idea is that we need to be able to forecast. We need to be able to anticipate what the demand would be, what the supply would be, and make the timely measures. So we will continue on this, and even the non-food inflation is also responding very well with the measures that have been done. So as you know, many of the non-food inflation sources are actually beyond our control, like oil. But the good thing is our demand side interventions seem to be working. So we, at the same time that we are also having this supply side interventions via, more of the renewable energies. So many of them have gone online towards the end of 2025, but many more will be coming online this year, and that will actually give us ample energy supply, and of course our move to encourage more of the electric vehicles is also is also working in our favor, so that we reduce our dependence on oil. Now, with respect to the food supply, of course, especially for this 2026, there's a huge allocation for the Department of Agriculture, so mainly to boost agricultural productivity, to reduce post-harvest losses, improve storage, and also the logistics. At the same time that there is this targeted intervention for the low-income group, so that they can avail of this low-priced rice.
There is this renewed focus on inclusivity in the development agenda this year and beyond, USEC Rose. But how exactly will this year's growth outlook become more inclusive, coming from last year's infraspend delays caused by the corruption investigations?
Yeah, that's right. Actually, for this year, as already mentioned by the president, there's 5 priority areas. So you have education, health, social protection, food security, and then job creation. Now, especially on education, health, actually for all of this, no? Especially education, health, and the job creation. This is actually an investment for the future. And we see that not only will it bring inclusive growth, but also sustained economic growth. It will increase our capacity to grow. Even as we are actually putting in all those other interventions to improve governance, to improve infrastructure planning. Yes, we know that the budget for infrastructure has been reduced, but this also gives us the time where kind of like the respite, no, to go over all those infrastructure plans, update them, put them in place as necessary.
In the end, Yusek Rose, people want to know if there's still a job waiting for them when they wake up outside the seasonalities and outside the catch-up that the government has to do. Can we say for sure that there will not be any job losses during the first 2 quarters that SEC-RC said we'd have to wait before the catch-up starts to take effect?
Well, even as we're waiting for that catch-up to take effect, we do have this huge, significant, I would say, growth driver, which is our hosting of the ASEAN meetings, and this will require a lot of manpower, a lot of both in the public and the private sector. So I think right away we can mobilize. We will be able to mobilize, create many jobs related to the hosting of the ASEAN meeting. So you're talking also about transport, hotel, restaurant accommodation, and of course the conventions.
All right, a lot more work to do, but thank you so much for laying out the strategy. Yusek Rose Edilion of the DepDev. Now let's take a look at the markets now. Those geopolitical tensions between the U.S. and Venezuela weighing on sentiment yesterday to close the session mixed. The Nasdaq climbed by 0.1% as tech stocks outperformed, while the Dow fell by nearly 1%, dragged by defense and banking stocks. S&P 500 slid by 0.33%. U.S. 10-year Treasury yields ticked down to 4.137%, and gold prices fell to $4,476 per ounce. U.S. futures are trading near the flat line. The Dow, the S&P up less than 0.1% each, and the Nasdaq is down about 0.1%. Take a look at the Asian markets. They're looking mixed this Thursday, with most of them tracking Wall Street losses following the president's comments on defense and oil in the U.S. South Korea's Kospi up by 1.25%, and Australia's ASX 200 rises by about 0.1%. Japan's Nikkei 225 slides by 0.6%. Now let's take a look at our own markets. We've been looking at the peso, but let's take a look at the PSEI and see that how it's opened on Thursday. It is higher, 6,301 by 0.1%. Profit-taking activity snapped the local bourse's 3-day winning streak, capping yesterday's session lower by 0.4%. The broader all-shares index, however, rose by 0.1%, with the local counters mostly in the red. And to recall, the Philippine peso was opened today slightly stronger, 59.30 to the dollar. The local unit hit a record low of 59.355 to the dollar on the back of a firm greenback and expectations of further rate cuts here. The 10-year government bond yields have ticked down to 5.995% from the previous close of 6.019%. And before we go, here's something sweet to look forward to this year. The hit stage musical Charlie and the Chocolate Factory is making its Manila premiere this July at the Theater at Soler. The show runs from July 8 to 26, bringing Willy Wonka's world to life with dazzling sets, toe-tapping music, and all the magic fans love. Fresh from a solid run in Shanghai Culture Square, early ticket access opens next week. Based on the beloved novel by Roald Dahl, it is a treat for kids and kids at heart. And for those who love chocolate, that's it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great day ahead.